And lastly, risk. This is probably the hardest one to quantify, but you kind of know it when you see it. But here's where industry structure could affect you, and some of that you can't do anything about. But you can think about your business model and whether you have recurring revenue streams or not. Whether if you don't, what are you going to do to get them, because that adds value, right? Think about that chart where you're trying to figure out the past is here, the future is here. How do I get more comfortable about the sustainability and predictability of the cash flows? This has a lot to do with that. So your strategy comes into this. What's your position in the market? These are softer things, but they really matter. I can tell you the things that anytime there's any kind of a M&A type of engagement, the things that pop up right away are recurring revenues, customer concentrations. If you see a company with a lot of litigation, there's always something on there. There's some kind of lawsuit. That all raises flags. But when you really think about it, this is the way I do. If you look at the company's earnings over time, and let's forget business cycles and stuff, what do you think, and their earnings, Company A's earnings are reasonably predictable and smooth, and Company B's are all over the place. And let's forget economy and stuff like that. What do you think is the biggest driver of that kind of an outcome? Consistent, managed growth, and inconsistent, kind of all over the place. What do you think is the biggest item that affects those two things, or those things in two cases? Management. Quality of management. If you have a company that can never seem to get out of its way, it's always up against its bank covenants, it's, revenues are all over the place, it's, the profits are drastically changing, there's a lot of variation. It comes down to the quality of the management of it ultimately, right? So think about, your people, your management staff. Do you have the right people in the right spots that are doing what they need to do to drive those results? But that, truthfully, is from a third party's point of view, when they see a lot of variation, they look at two things principally, well, three. They look at the business model and whether there's a lot of recurring stuff. They look at the industry that you're in and whether that drives that variation. And then they look at your management staff. And if they interview your management staff and they're going to be the owner of your company later and they say, you know what, I don't see a lot of people here that are real strong and I'm going to have to replace all of them, that represents more risk to a buyer, right? So you got to think about, so this is kind of where the rubber meets the road in dealing with people, which is arguably the hardest thing that you'll have to deal with. But if you can stand back and look at it, independently as an investor, what would you say? Can you separate yourself from that? So it's hard to do, but I would just say to sort of conclude here, these are the, this has been consistent throughout the discussion. And again, what I try to do is to show you the way the mechanics of a formula work and how you drive the changes in that formula, to your business. So.